Hey guys, welcome back to the Independent Investor channel. My name is Ryan. So good to be with you. On this particular channel, we talk about different types of accounts that you can use to aid and assist you in your financial future. We talk about the internal components, the items that can be bought that make up the particulars of those accounts. And what I'd like to do is talk about something that gets brought up all the time online, and I'd just like to give my subscribers a quick comparison of what's considered ETFs and what's considered index funds. These two products are extremely similar in nature, but they carry with them a little bit of a different suite of products. All right, a little bit different benefit between the two. I am an extremely big advocate of these two products in any well-diversified portfolio. All right, both of these products, the exchange-traded funds or the index funds, are going to provide you diversification that was previously not existent when I started investing, some 2 decades ago. The ETF product, I don't remember ever having that available to me. And the products that are available now to folks are offered at such an extremely low fee that you can justify getting into these products that are bundled together to provide a really nice suite of stocks along a super broad spectrum that can provide you that diversification within one particular product. Okay. So please enjoy this cross comparison of the exchange traded funds and the index funds. I'll kind of start with point one here with the ETFs. An ETF, an exchange traded fund, can just mirror the broader index. You can buy an ETF that mirrors the broader markets. And when I talk about the broader markets for you guys that are beginning investors, if you pay attention, to the Dow Jones Industrial, that's a broad market, the S&P, the Russell, the NASDAQ, all those are broader markets. And you can actually buy an exchange-traded fund that specifies in certain pieces of those broader index, all right? Now, you can buy spider ETFs that can buy each individual sector. If you want an industrial sector, or if you want a healthcare sector, or if you want a technology sector, all right, you can buy those specific spider ETFs to cover each one of those sectors. I'm not going to get into those specifically on this particular show. This is really just to provide a broad-based explanation of ETFs for my general viewing audience, and along with my subscribers, who most of them are friends of mine or have been recommended to the show and are looking at a really good understanding or definition of these two products. Okay, so an ETF is actually like a stock. Okay, it actually is available for purchase or sale during the market. All right, the market opens at 9:30 Eastern and it closes at 4 o'clock Eastern. Now, there's a 15-minute delay, so if you have a brokerage account, or if you do like I do and trade within my self-managed Roth IRA account during the day, then this suite of products is actually available to you throughout the trading day. All right, so you basically can buy it like a stock and you can trade it like a stock. You can buy it or you can sell it. Okay, and when you buy that ETF product, you're basically buying a broad stroke or a broad representative of that overall market. So in the Dow Jones Industrial, right, there's just over 30 companies that represent the Dow. So an ETF product that mirrors the Dow Jones Industrial, all right, can be bought basically, and you're buying a piece of that mirror image. Okay, Chasing Money 101, another guy that we're working with building our channel. Give him another plug on here. He does a pretty good job offering really one of my favorite ETFs too. So I'll give my stamp of endorsement on the SPY ETF, ticker symbol SPY. That's just a broad representation of the of the S&P 500. Guys, if you haven't checked out his channel, please go over and check it out. Different perspective than mine, but I think we're all trying to get to the same place, in just really trying to help and deliver information aimed at helping folks understand investing a lot more. So again, the ETFs can be traded during the day. And one particular advantage or disadvantage to the ETF product, depending on how you look at it, I tend to look at it as a slight disadvantage, is that down here in the bottom, an ETF is only going to pay you a cash dividend. And sometimes that can be misconstrued for a dividend, giving you the option to either buy more stock with a dividend reinvestment into your particular asset that you've bought. You don't have that option with an ETF. So an ETF can be utilized within a tax-deferred account, again, the self-managed Roth IRA, or a brokerage account to invest in and just pay you direct cash when you're invested in those broader markets, all right? We're going to get into follow-on videos that actually break down within. I'll show you my brokerage account, how I actually go in there and search out, and pull each ETF so I can look at the fund fees and look at the actual fund allocation within each of those funds, so you can have a real understanding of maybe what their top 10 holdings are. That way it'll give you a better idea that you're investing in an Apple, a Microsoft, your IBM, and so on down the line. It'll give you an idea of where those dollars are spread over that particular index, all right? So over here on the index side of the house, when I started investing, my first purchases and assets were mutual funds. And looking back on, purchasing those mutual funds, there's really nothing that I like about mutual funds now. I think they're one of the worst products that you can buy on the market. There are things that, and you can buy them still today. I don't understand why anybody would ever go against buying either an index or an ETF or just straight up a legitimate, it's just a straight up stock. If you wanted to buy a Coca-Cola or a Pepsi or any of the, the blue chip stocks that I talk about on this particular show, I would endorse that any day over buying a mutual fund. But the advantages that an index fund has over a mutual fund are in the fees, okay? Old mutual funds used to have load fees. Some of them were advertised with no load fees. But extremely high maintenance fees, some over in between 1 and 2% of the total overall holdings that were being extracted from those funds as you owned them over time. Guys, I've done videos on the effects of fees, and if you haven't paid attention to those videos, I highly encourage you to go back. Use the fund fee comparison analysis that I pull off of the Trading Academy, which is free of charge, guys. It's a fun thing to work through. And it's a real eye-opener. I don't want any of you guys to cry when you do some of these fee comparison analysis, because you guys might be, in some of these funds that I really encourage you to take a hard look at and really understand the cost basis within those accounts, okay? But the index fund is like a mutual fund, all right, in that it's still a broad, diversified asset, the same as the ETF. It provides you that diversity that is it's one of the pillars of your portfolio. It should be one of those things that you're always reevaluating and retooling every single time you're trying to restructure or add a position to. You always need to ask the question, am I diversified? Okay? And I talk about the importance of the ETF and index funds earlier on in my videos, because if you're a new investor starting out, honestly, guys, these are the first two places you could look. You could look at long and short-term bond funds. I tend to shy away from those the younger that you get, okay? So if you're young, you can almost kind of do away with the protective nature in a severe downturn of the market and interest rates are really high, okay? But I tend to focus on these for the beginning investors, because this allows you to invest and not get hit with the entry fees that are really significantly low. They're worth paying to get into these positions, but I don't want to see folks trading in and out of these positions at all. These are positions that you can take either in an ETF or an index fund that you can buy and hold them forever. Okay, you can buy them, you can set them up for dollar cost averaging, which means if you want to put $25 away, every 2 weeks or every month, these are the vehicles that you want to do that with and allow those to compound over time. Okay, but these allow you to be a passive investor. All right, and I just have an arbitrary figure of 10,000 in the fund before you start adding individual stocks to those accounts. Okay, now in my previous video I talked about the importance of investing in the correct order. All right, this is why I offer these before we start getting into the fun stuff and talking about actual stock picking, because I believe in any diversified portfolio you need a solid foundation first. Okay, and these are going to help you get these solid foundations. Okay, the difference between an index fund and an ETF here is that the index fund will actually trade after hours. Okay, so it's similar to a mutual fund. So if you actually purchase the asset during the trading day, it's actually going to settle out for you after hours. So no need to be concerned. It will settle out for you, but you're not going to see those proceeds in there until the day after. It's the same thing with when the market closes. You're not going to see it fluctuate up or adjust back until after the trading day is closed. All right, so those settlements occur in advance of 4 o'clock Eastern time. I'm in New York, so the index funds are going to settle after hours as opposed to a buy and sell or a buy and hold, and those are available for trade over here during the actual market. All right, and the last thing I want to talk about, the difference between the index fund and the ETF fund, is that the index fund down here is available for dividend reinvestment. All right, that's an extremely important function, and one that I would consider an extreme net positive in the index fund, because you can actually set this up again in your self-managed Roth IRA. You can set this thing up to just roll money back into it, and some of these index funds will pay you, of course, your dividends every quarter, but some of them will pay actually a super dividend at the end of the year when things have got recalculated. They'll push that back out to you, and all those dividends that are paid to you as an account holder are going to be dividend reinvested back into this particular index fund, which is an extremely good benefit. One final thing that I want to mention to you guys when you're trying to consider whether or not going into an ETF or an index fund, again, I would encourage you to look at both. If you can spring both of them, so be it. But one thing that might kind of help in my research of ETFs and index funds, ETFs have really no minimum balance to enter into a position. You can buy the SPY, the SPY ETF for $100. If you wanted to buy one share of it, you could. All right. Whereas over here on the index fund, you're going to have a little bit more trouble finding a zero minimum balance to start the account. Okay. I've done a lot of research on it, and I have found a few. But when I looked a little bit further into the holdings of those accounts and the time that it's been out, I really tend to kind of gravitate toward those funds that have been around a while and that I'm happy with the holdings and that pay a nice healthy dividend. And for those good quality index funds, they're usually offered by Schwab or Vanguard. Those are two of the best houses that offer these. All right. They are going to offer the index fund at an extremely low fee. All right, anywhere from 0.15. Remember, I talked about the management fee over 1%. These are going to be anywhere from 0.15 to 0.20. But unfortunately, in the index fund, most of these come with a minimum initial balance. All right, and that's just the nature of the game. All right, some of those minimum balances go all the way down to 1,000. I just bought 4 of them myself just a month ago, and the minimum balance to enter into those Vanguard accounts, I believe, was around $3,000. Okay, and I invested in one that was a zero minimum balance. So something to kind of keep in mind if you're looking to fund that account up and to get ready to purchase a particular asset, you got to watch for the minimum account balance requirement on the index side of the house. whereas the ETFs allow you that instant exposure that covers the broad index. Okay, so guys, thank you so much for tuning in. I think in each of these products are pivotal pieces to any well diversified portfolio, which is critical cornerstone investing that I advocate on the Independent Investor channel. Leave your comments at the bottom of the video, and hit the subscribe button so that you're notified of any future videos. You can push this link out to anybody that you find may benefit from the information. And hit the thumbs up button, guys, if you enjoyed the comparison between the ETF and index accounts. Guys, look forward to being with you on follow-on videos, and good luck in your financial future.